Hello and welcome to this installment of our Disruptive Leadership Call Series. I'm Brian Dobson, Head of Disruptive Technology Research at Chardan Capital Markets. And as always, I'll start the call off with some important disclosures. So our compliance team has asked me to read this statement for the investor call. By participating in this call, our speakers attest that they have made Chardan aware of any potential conflicts, and they will not discuss any material, non-public, or confidential information that they are aware of that may breach their legal, regulatory, or fiduciary responsibility to any party. So with that bit of business out of the way, today I'm happy to say that we're joined by two members of the Ouster management team, Angus Pacala, CEO and co-founder, and also Mark Weinswig, CFO. Angus, Mark, thank you so much for joining us today. It's a pleasure to have you.
Thanks, Brian. This will be fun.
Yeah, absolutely. So Angus, let's start off at a high level. This is the second time that you've appeared on our series, and what we'd like to do is really hear from you about the mega trends you think are driving the business. It's been about a year since we've had you as our guest. How have things changed in that year, and what's your outlook for the next 2 years?
Well, a huge amount has changed at Ouster in the past year, and just to hit some of the highlights, we went through a major merger for the lidar industry at the beginning of this year. We merged with Velodyne Lidar in a merger of equals that closed in February of 2023. Velodyne is a storied name in lidar. They're literally the inventors of the entire industry back in the early 2000s. Ouster is an emerging leader in the space, building digital technology, and we combined forces at the beginning of the year to build a company that had kind of the sound financials, the scale, and the continued growth, and just maturity to get to profitability and be one of the first, if not the first company to really make it through to being a mature public company in this space, which is what this industry is ultimately all about and what it needs to serve the kind of expanding customer base for lidar. So a lot's changed at Ouster, but just kind of stepping back and talking about the trends that are driving lidar adoption in general. We've seen this kind of renewed focus on safety and efficiency and cost-saving technologies across a diverse set of use cases for lidar. And the backdrop here is automation. Automation and autonomy are providing increased safety, increased efficiency, and cost savings, whether you're an industrial machinery operator, like a construction machinery company, a smart agricultural company, an automotive company, or a supply chain logistics company shipping goods in a warehouse or at a dockyard. There's a focus on automation and autonomy that is driving demand for lidar, because lidar is really the underpinning, enabling technology of intelligent machines. All of this automation relies on sensing the environment, and there's no better sensor to actually give eyes to machines than lidar technology. So we've seen a real pull from a diversified set of customers in the last couple of years as companies have tightened their spending and really focused on the ways that they can drive down costs in their industry. And in many cases, that's through better efficiency, better safety, through automation and autonomy.
That's right, and you alluded to the merger earlier. We certainly think that positions the company for success moving forward. In January, we upgraded shares to a buy from neutral. We're excited to hear more about that merger unfolding as you deem it appropriate to bring those details to market. You referenced that a lot has changed over the past year, and certainly it has. I think that Ouster has emerged as one of the best positioned lidar companies. How do you think the competitive landscape has changed from a year ago, and how do you see it evolving over the next year?
Well, it's gotten a lot tougher to be to kind of rise out of the fold as a lidar player. And in the investors, kind of the public perception of the lidar industry has taken a negative turn, I would say, just to be frank, in the last year. Some of that optimism from 2021 and companies going SPAC has eroded for industries that are emerging technologies that are kind of early in the commercialization stage. And that's changed how, that's changed how the LiDAR industry is valued. It's changed how companies are talking about their commercialization strategy. And it's really a critical point for the entire industry in terms of winners and losers in this space long term. No matter, LiDAR or not LiDAR, executives at companies are making hard decisions to reduce costs and show more viability in their businesses long term. I think Ouster has always been ahead of the curve on being practically minded and positioning the company for long-term success, whether it's our digital technology and kind of building to the end state technologies of this industry, or it's the way we run the business with a tight capital cost structure and really just kind of critical focus on the core aspects of the company that are going to lead to profitability, like high margins, continued scale, and outsourced manufacturing, or just frankly serving a diverse set of customers and actually reaching appreciable commercial scale. Shipping over 90,000 sensors in our company's history. That's the kind of focus that is needed from these companies in order to get through to profitability, which is what is necessary to have a stable and long-term LiDAR industry.
Yeah, you certainly have substantial scale, and you've been operating at the vanguard of bringing LiDAR to the mass market. I suppose as you're thinking about your sensor offerings, what is it about your portfolio of products that makes them stronger in comparison with your competition?
Well, there's a couple things. So, what makes Ouster special today, really three things here. There's the digital technology. So Ouster builds digital LiDAR, where we've packaged a traditional analog LiDAR onto a silicon chip, kind of pulled all the complexity out of the LiDAR, which is a very complex kind of multimodal technology, put it onto a low cost, but incredibly high performance silicon chip. And that's just core to everything we do here. All our products kind of leverage that. The second thing we've done is diversify our offerings into all of these emerging markets that are where LiDAR is an important and kind of critical element. So we're diversified into automotive, industrial, smart infrastructure, and robotics. Diversification it means a bigger TAM. We're building a bigger company with more opportunity because LiDAR is critical across all of these industries. Autonomy is important for an agricultural tractor, a mining machine, a warehouse robot, and the cars that you and I drive for all the same reasons. It's safer, it's more efficient, and it can save the end customer either convenience or cost. And so, we did a good job of building a technology that then allowed us to build a product family that then could serve a diverse set of customers. And so digital technology has allowed us to build this flexible set of products that work across industries. And that's very different from a lot of the other LiDAR companies that have narrowly focused their technology and their product offering for a single use case. In many cases, just consumer automotive use cases. And that's just, you're unnecessarily constraining the opportunity for a LiDAR company when you do that. So I think that's where we've gotten a lot of our success. But increasingly, the third pillar that is increasingly a big driver of our business is the software offerings that we're now providing. At the beginning of the year, we released two really kind of fundamentally new software offerings in Gemini and Blue City into that serve our smart infrastructure customers. And now we're able to sell these a kind of full software solution for smart infrastructure, which helps us to accelerate the adoption of that technology into the smart infrastructure sphere. And just build even more momentum in that industry. I'm sure we can talk about that later, but I'll pause there.
Yeah, and you touch on an important point there, which is automation within the industrial sector, within the agricultural sector. That's one of the reasons that we like the stock and led to our upgrade. But certainly, when you think about how those jobs will be done 3 years, 5 years, 10 years from now, it doesn't take a lot to imagine fully automated warehouses and automated fields in terms of agriculture. So I guess moving from that, let's touch upon the merger a little bit. First of all, how's the integration of Velodyne going, and what type of competitive advantage do you think you'll have as that business becomes fully integrated?
Well, the merger is going great. I mean, we've announced, there are a couple things that were critical for the merger thesis to be realized. And the merger thesis was all about increased commercial scale, a stronger cash and kind of financial underpinning of the company, and then cost reductions that get us to a standalone company that was on a strong path to profitability. And so we announced at the outset of the merger that we were going to achieve at least 75+ million of cost synergies, of which we realized $50 million of those synergies day one of the merger.
Yeah.
We have subsequently increased our outlook on cost synergies for the merger each quarter, and last quarter announced expecting over 110 million in cost synergies between the two companies. It's a big increase from where we started, and it hits directly at our path to profitability and the speed at which we can do it. So, from that perspective, we're building an even stronger company than what we had in the thesis between the two companies when we closed the merger. Just lower costs to match with the commercial scale. I'd say on the commercial side, we've shown really strong growth, showing that we have been able to combine the two companies effectively and maintain the customer base between the two. So we have 88, last quarter in Q2, we had 88% year-over-year growth from the year before. Obviously, that's the combination of the two companies, but that's the whole point, is we're building scale by combining the customer bases and not bleeding off customers when we've combined these two companies. We felt that we could support the diversified customer sets between Velodyne and Ouster, and we're doing that. And we're also announcing some great kind of combined wins or synergy wins between customers. I mean, I think Motional is a great example of a customer where the manufacturing know-how, the commercialization know-how of Ouster combined with actually a Velodyne product allowed us to close one of the biggest binding contracts for LiDAR in the robotaxi industry. So, and that's with Motional, a really strong partner backed by Hyundai Mobis. So really happy about how things are going from the commercial side, from the cost synergy side. And then there's a whole kind of another layer that you don't see as much of, which is just kind of combining the two company systems, getting teams working together. And I have to say that, we've done a great job there too. We don't even talk about Ouster versus Velodyne internally anymore. We're all one team.
Yeah, that's great to hear. And I think those synergies came on faster and stronger than a lot of people on the street were anticipating. And it's good to know that you're already seeing some call it revenue synergies on the other side of the business by combining products. That said, I'm gonna ask you a bit of a tougher question. You've said publicly in the past that on the third quarter, around the third quarter, you're planning on issuing more forward-looking commentary about the combined business. Is that still the plan?
Absolutely, yeah. I mean, coming out of the merger, we want to make sure that we're doing exactly what we said we were going to do, meeting or beating expectations from here on out. And that goes for any kind of commitment that we've made on giving kind of a forward view of how we get Ouster to profitability. And I'd say we've shown a lot of that information already. Like it's not rocket science. We need commercial scale, we need positive margins, and we need a reasonable cost basis for the business. We're doing that right now. We're pushing hard on all three of those things. We're growing significantly year over year commercially. We're taking down costs, identifying new synergies all the time, and we're improving our margins. We've had some complex financials coming out of the merger that have affected our GAAP gross margins, but we've shown that quarter over quarter, our non-GAAP margins are improving, and that we expect those to align with GAAP gross margins by the end of the year and get back to or exceed the 20% the 27% blended margins that Ouster operated with last year. So, we're going to be giving an update. We want to give people a better view of where Ouster is going. And I think we're going to have a lot of the kind of proof points in our actual core financial results come Q3 to give a lot of credence to that forward look.
That's great to hear, and I think that will go a long way also to improving sentiment on the shares, as people can see what you're seeing in terms of the merger. Now, I guess just taking a step back to view the company from a higher level for perhaps investors that aren't as familiar, maybe you could walk us through a couple of your key areas of operation in terms of end users, being smart infrastructure, industrial locations, the automotive market, and robotics. I guess, where do you see the most opportunity going forward? Maybe you can just give us a heads up on how you're thinking about those separate industries.
Yeah, absolutely. And I think that the industrial and warehouse automation space, that's Ouster's bread and butter. We've been operating in this space with some of our kind of core customers for going on 5 years. We started commercializing and selling the technology back in 2018. So we have customers that we've seen grow year over year for the last 5 years, and now start to reach real kind of production scale in the industrial sector. So I'm talking things like agriculture, mining, and construction equipment, heavy machinery, and just automating that machinery, allowing it to drive more quickly, to extract more ore or more products from the soil, using the same capital equipment, or warehouse automation customers. We've done really well with the kind of automated warehouse robotics industry. We have great customers there, like Syngin is a customer we just announced as a Rev 7 product customer this last quarter. But they're building automated forklifts that are safer, more efficient, and just get more done with a similar capital kind of expenditure by tacking on.
That's a compelling story that they have there.
Yeah, absolutely, and it's one that's, I mean, the warehouse kind of industry, the robotics and the pallet moving and forklift kind of equipment is a huge industry. There's over 1 million forklifts sold every year globally. So it's like a major automaker, one of the top 10 automakers in the world worth of forklifts sold every year from a unit count. And we're cornering that industry. We feel like we have a really strong offering there, and have 5 to 10 major customers in that space. So and there's the tailwinds that I mentioned, safety, efficiency, and cost reduction, that are pushing customers to adopt our technology, to kind of strengthen their own businesses. And then, so industrial, we're doing great there. We have a really strong customer base. But what I see emerging is this really interesting kind of smart infrastructure play for Ouster. Smart infrastructure last year was about 15% of our revenue base. But we see that growing significantly over the next couple of years. For us, smart infrastructure means security, crowd analytics, and traffic infrastructure. And Ouster, at the beginning of the year, like I mentioned, released 2 software products, one targeted squarely at the security industry. So, securing fence lines, perimeters, and building sites with LiDAR instead of cameras. And then another product, Blue City, that is focused on traffic control infrastructure. So literally controlling the traffic lights on our roadways with LiDAR to make it more efficient and more safe for more road users. So LiDAR can give eyes to an intersection that allows you to see pedestrians, bicyclists, motorcyclists, and cars, and give them all kind of equal footing, to keep everyone safe and to keep the intersection less congested, less emissions from idling cars. It's just a win-win on all fronts.
Yeah, so, and some of the crosswalk technology that you debuted at CES is very impressive.
It's really cool. I mean, again, this is just giving the eyes of an autonomous car to an intersection. It makes perfect sense to do it. There's kind of obvious benefits and from just a cost savings for the technology, because you can deploy one LiDAR sensor at an intersection to replace 4 to 8 traffic or radar systems at that intersection. And then there are the benefits in safety and efficiency. So we're seeing adoption there. Traffic infrastructure is a 10 to $50 billion industry, depending on how you cut it. The security market, where we're playing in these high-end intruder detection systems, is a $30 billion market. There's hundreds of millions of cameras sold every year into the security market. So we're tapping into big new TAMs with our software offerings combined with our mature hardware. And I think it's really exciting, because it's actually another way. It may be some of the first ways that normal people interact with this technology, because you'll be walking to work, biking to work, or driving to work, and your traffic, the traffic system that you're driving through, your lights are being changed by Ouster LiDAR.
Yeah, certainly an incredible evolution in infrastructure technology.
Yeah.
So I suppose as you're thinking about all of those industries and you're thinking about your recent merger, what does the future hold for Ouster?
Well, the Ouster is merging into, increasingly we're selling these complete solutions, these kind of intelligent systems that there's an immense appetite for in our end verticals, even in the industrial space. That our customers need technology. They're digitizing their technology. An equipment manufacturer that's selling $10 million gantry cranes or multi-million dollar ore haulers for a mine. They're looking for ways to adopt digital technology to automate and create autonomous systems from all of that investment they've made into kind of core industrial hardware. You can eke out, it's not eking out, you can double the capability of those machines by just adopting this digitization, and they need partners to do that. And so Ouster is increasingly a partner for autonomy technology, combining best-in-class LiDAR hardware and technology with this AI kind of perception solution software that we've released into smart infrastructure, but that I think is going to be something we're able to release into many different verticals that we're operating in. The other thing is just Ouster is poised to release something really new in the core kind of consumer automotive market for ADAS, and that's the digital flash sensors. So we've been working for a long time on this. Digital flash is it's a fully solid state, ultra low cost and high performance sensor suite that's kind of purpose built for this high volume automotive ADAS application, literally for the cars that you and I drive. The end goal here is to get LiDAR into every last car as a standard fit option to make them safer, more efficient, and more convenient to basically drive you to work instead of having to do it yourself. And so we just announced that we had built the first form factor complete digital flash sensors. These are early B samples, but they're, from a data and form and fit and function standpoint, they are the final product basically. And I just we've started going on a roadshow to get these out to automakers. And I was just in Germany actually a couple of weeks ago. And we're just going to be getting this technology into cars in the next couple of years. And that's really exciting because it's one thing the industry needs a mature low-cost offering, and digital flash is kind of the end state offering for that.
Excellent. That's what we like to hear. We like to hear that you're on the road in Germany talking to OEMs, introducing them to this product. Certainly, as reflected in our published research, we have a buy rating on the stock. We think that you have a very strong product offering. And we really like that Ouster is not simply focused on the automotive industry as so many other LiDAR providers are. So on that very positive note, Angus, thank you so much. Mark, thank you so much for joining us today. We really enjoyed having you, and look forward to having you as a guest again in the near future.
Thanks, Brian. It is always a pleasure.
Great. Thank you very much.